Right. Welcome back. Oh, once again, it's straight up speaking. And let me hope you're doing well. Let me hope you're doing well. You get me? Let me hope you're doing well. Now, most people and most painters have been teaching you about trend lines. Everyone talking about trend lines in their different aspects and in their different ways of understanding these trend lines. But I want us today to learn about trend lines in a mastered way or in a professional way. This strategy, trend line strategy. Sorry, strategy. Call it mastering. Yeah. You see these trend lines? Most people always draw them on their charts while analyzing. While doing what? While analyzing their charts. But in reality, it has a lot to do, or it has a long way to go. With them, these points which I'm highlighting are either your entries or your exit points. Understood? These are either your entries or exit points. This is a bridge structure. This is a bridge structure. But today's example, I'm going to give you a bearish structure. Understood? Now listen to me carefully. In most cases, when we are dealing with these trend lines, first of all, we have to first establish our trend. Our what? Our trend and the conditions in which we are trading. Are we in a trading market or in a ranging market? Because you might do what? You might mark your trend on a lower time frame, while on the higher time frame, the market is just ranging. My brother, you'll be cooked. You'll be cooked. That's what I can say. Now, all your eyes should be on these highs. Here, likewise here. What am I looking for? These are going to be like my entries. These are going to be what? My entries. These highs. Because I told you, to confirm a proper break of market structure, all a valid one, the candle closure in this moving leg from here to here, it has to be with a candle closure. Candle body, it has to close above this previous highs. And after doing so, we shall confirm a higher high. If this is a high, this is a higher high, higher high. You understand? This is a what? This is a high high, which means these are lows. Higher low, higher low, higher low. What are you trading? Even if you connect at least two equal highs, when they're equal in this trend, we shall take it. to be a valid what trend line. You get me? There is a reason as to why I drew here these lines and these yellow lines. Because why did I do so? That at the high, again, it's where our market is stopping. You always do this mistake. Not understanding that market will retrace to either form these arrays here to stop them and like use them as support levels. However much most people. Now, let me tell you this. This is the hidden thing. Most people think that this line is the support line. No. Let's say if we are bullish. It's not the support line. The market is looking to the left side. All the data. The market is looking at this all the data before it retraces at a specific point, not this line. Now, why are we determining to use this line? This line, which you drew or which you have drawn on your chart, is like a trail stop. It's what? A trail stop. But in reality, we are mistaught that the market has to stop on this line, then it goes up. It stops on this line, then it goes up. I'm going to show you on real charts what really stops the market. Because this is just a simple illustration. This is what? This is a simple illustration. In reality, now, if your market breaks this high and it goes up, automatically we shall wait for a sell. A what? A sell. A market has to always refresh whenever it breaks structure. It has to refresh. I mean retrace. Now, in that process of retracing, to look at the previous data to see what might stop it or where is liquidity. But in most cases, again, what's too fascinating, it doesn't look at liquidity, it looks at these highs. At these previous highs. Here we might get bearish order blocks. What? Here. Rejection blocks in these areas. You understand? In most cases, if our market exceeds this line, if it exceeds this line, if you have entered from here, which means this is your exit, in most cases, candle closures will not be below these lines. There will be just rejections all weeks with the effect of these previous levels, not the trend line. A market moves in a trend, but it doesn't move on this line. Because if we were to be drawing these lines, the market would be respecting them each and every day. Because this line doesn't highlight the liquidity, and the market looks for liquidity, where is much supply and where is much demand? It's what the market is looking at. Whenever you're marking your highs and lows, I just want you to look at these higher highs, highlight them with these lines, and wait to see what will happen. That's the only correction I can give you, like exercise. That's what you should do. These should be exit points whenever our market reaches these lines or it breaks below. These must be what? Your exits. But if candle closure closes below this line, know that we are now changing our direction. We might be changing direction, and this might happen like this. Form another trend line or another trend. You get me? Or you understand? When price breaks above the previous high, consider looking for your entries because the retracement, it's a must. It will come to this high or slightly above it. And in most cases, it will break below this line, this trend line. It forms a rejection. Wicks will be below this line, candle bodies will be up. Then we proceed. And if you experience this still, you can buy what you sold from me. You sold, then you can buy from me again. If you marked it in a proper way. Understood? Now, let me first take you to the chart and I'm going to show you the bearish example. Still, it braked, then it changed direction. Okay? Now, I just want you to look at this high. This was our high here. This was our high. That was our high. Just what we should look at these points. Why did it stop here? I think now you can see what I told you about here at this illustration. These are real life charts. Real life charts or real chart examples. See, it stopped here. This is what happened. Understood? Stopped here because of this. Now, this is a 30 minutes time frame. I want you to look carefully here. And the best thing is, if you can see, now this is a bearish engulfing candlestick pattern. Those patterns, all that engulfing pattern, it's better. It's really good for your entries. Now see. See what has happened. You just have to integrate some simple skills into your trading style and you just be profitable. Bro, sister, trust me or not, you're going to be profitable. If you just pay much attention and you give these videos some time, you watch them carefully. You know what? You watch them carefully. I just want you to see these points where the market stopped here, not just because of this candle, not just because of this line. Sorry, this line. But just see how it has worked out and how it played out well. Now, go back test as you trade. Okay? Go back test as you integrate this strategy, all this strategy into your trading style. If you're fond of using trend lines, blessings on you, bro. With all that, allow me wish you a good day. Thank you.